Let's talk about taxes in retirement. For most folks and for most retirees, taxes are one of the biggest expenses that they'll face. You probably don't realize that you have more control over your tax bill in retirement than you think. My name is Chris McClure, and today I want to talk you through one of the most powerful but often overlooked retirement tax strategies, one that could save you hundreds of thousands of dollars over your lifetime. And to show you how this works, let me introduce you to Mike and Susan. Mike and Susan are recently retired. They've done a great job saving between their 401ks, their IRAs, and their investments. Between all three of those, they have about $3 million in retirement assets. And for a long time, they assumed that once they stopped working, their tax bill would go down. But when we ran the numbers, we realized that they were on track to pay over $1.2 million in taxes over their lifetime. And here's why. Like a lot of people, most of their savings are in tax-deferred accounts, meaning every time they withdraw money, they owe taxes. And right now, they're in a fairly low tax bracket. But once they hit age 73, the IRS forces them to take required minimum distributions, otherwise known as RMDs. And suddenly their income jumps, which means their taxes go up too. Not only that, but those forced RMDs can also trigger higher Medicare premiums, higher taxes on Social Security, and even push them into a 35% tax bracket. So what's the solution? We put together a Roth conversion strategy to gradually move money from their IRA into a tax-free account before their tax rates increase. Instead of waiting for RMDs to force their taxable withdrawals, Mike and Susan started moving $150,000 per year from their IRA to a Roth IRA. They did this while they were still in a lower tax bracket. Now, unfortunately, they do have to pay taxes on that money today, but they're paying a much lower rate than they would later. And here's where it gets really powerful. You see, once the money is inside the Roth IRA, it grows completely tax-free. They'll never have to pay taxes on it again. No RMDs, no extra tax on Social Security, and no surprise tax jumps later in life. And in fact, it even passes to their kids and grandkids tax-free as well. And over time, the difference is huge. Let's look at the numbers. If they left everything in their traditional IRA, and they started taking RMDs at age 73, they'd be pulling out around $180,000 per year on top of their income. And by the way, they don't need that much. That would push them into the 35% tax bracket that I mentioned earlier. And it triggers extra Medicare surcharges. By the time they hit their mid-80s, they could have paid over $700,000 in taxes just on RMDs. But by converting smaller amounts earlier, they were able to keep their tax rate lower, avoid Medicare penalties, and by the time they retire, they had over $1.5 million in a Roth IRA that they can withdraw from completely tax-free. That means more control, more flexibility, and less money lost to taxes. It also means more money for their kids and grandkids. Most people don't realize that we're currently in one of the lowest tax rate environments in history, but tax laws change. The national debt, if you can believe it, is over $34 trillion. Medicare and Social Security right now are under pressure. And tax brackets we have today, who knows? They're set to expire at the end of this year. So if you have a large IRA or a 401k, waiting until later to withdraw money could mean paying higher taxes than you need to. That's why strategies like this work. They allow you to take control of your tax bill instead of letting the IRS decide how much you owe. See, Mike and Susan, now they have a long-term tax plan that gives them confidence in their retirement. Instead of worrying about tax surprises, they know exactly how much they're paying now, how much they're saving later, and that their money will last. And you see, that's the power of having the right tax strategy. So if you're thinking about retirement, or maybe you even already retired, you want to make sure you're not paying more in taxes, then you have to start looking at strategies now. You worked hard for your money. The IRS doesn't need any more of it. And if you found this helpful, please be sure to hit like, or you can actually click on my calendar below to schedule some time to chat. Also, be sure to subscribe for more ways to keep more of what you've earned, and I'll see you in the next one.